What if you could confidently execute trades like a pro, knowing exactly which stocks to target for maximum returns? In today's video, I'm not just going to tell you, I'm going to show you, live and unfiltered. You'll see the exact trades that I'm making, the reasoning behind them, and more importantly, at the end of the video, I'll show you the results. I'll walk you through how to use tools like barchart.com to find the best stocks to sell puts on, with just the right amount of volatility to maximize your premiums while minimizing risk. Whether you've got a large account or a small account, I'll show you exactly what stocks to use for each one. And I'll show you how I target stocks like Broadcom, Snap, and Marvell for consistent results. But first, a quick intro. I'm Oliver El-Gorr, founder of Freeman Publications and investingcoach.com. Over the last 4.5 years, we've sold 180,000 books on Amazon. And I've personally coached over 400 students, helping them grow accounts starting from $5,000 all the way up to people trading $3.8 million worth of capital. And my mission is to help investors just like you take control of their own trading results and get consistent income from the market in just a handful of hours per week. So, without further ado, let's jump into the video and let's get trading. Subscription, that's better. So we use that because we can get option data from it, whereas FinViz we can't without a premium subscription. And what I'm going to do is I'm going to load up the CSP candidate sheet. And this is going to give me some candidates to look at. We update this every single Monday. And what we're looking for here is moderate volatility in our stocks, more than anything else. So mainly 30 to 55% implied volatility tends to give us a nice balance of premium to volatility. So those of you who have been with us for a while will see some very familiar names here. For larger accounts, I know Broadcom's been fantastic this year. Adobe's been really good. CrowdStrike has been, well, it's my largest individual holding. CrowdStrike's been phenomenal. Meta's been great. Marvell technology for some smaller accounts has been really, really good. Rocket Lab is Rocket Lab. Who on earth has edited that? And delete that row. Super Microcomputer's been pretty good as well. Us smaller account guys, Snap has been an absolute gem, as long as you haven't traded it through earnings. And some other names there as well. Western Digital's been pretty nice for those of you with medium accounts. So first things first, one option is going to be 100 shares of stock. So basically multiply the stock price by 100 and you're going to get the account size that you need. So stock like Broadcom, you need $174,000 of buying power to trade. So not going to be accessible for most people. Good news is Broadcom is actually doing a stock split pretty soon, so it's going to become a lot more accessible, just like Nvidia did last week. And then Lam Research are doing one in October as well. So 3 top quality companies becoming more accessible for people with smaller accounts. So let's look at some names that we can trade with a smaller account. So we've got Kamiko in here. So I'm looking sub 10K. We've got Kamiko. We've got, what else have we got here? Hewlett Packard, which I know a few people hit some profits on today. We've got Corning. If anyone knows what Corning do, they make the glass that goes on your iPhone. So this thing here, that's made by Corning. Marvell, which is a semiconductor company. Then we've got Pinterest, social network, Snap, another social network as well. AT&T. I don't think I need to tell you what AT&T do. So this is going to give us our sort of like long short list. We're just going to grab some names and we're going to straight away shove them in TradingView. I love TradingView.com. Now, for 7 years, I never paid for it. Unfortunately, in the middle of last year, they did limit the amount of stocks you can look at for free and the amount of indicators you can look at for free. One of our wonderful students, Anthony, actually has a workaround for this. But because I have a premium account, I don't need to use it. So the indicators I'm going to use, and ignore the fact that I've got Teladoc up on the screen right now. It's just because whenever I type in TradingView, that's the first stock that comes up. I don't know why this is. Teladoc, horrible, horrible stock to sell puts on. Do not do it. Can anyone tell me why this is a objectively horrible stock to sell puts on? Yeah, Aman's got it, Helen's got it, Carlotta's got it, Robert's got it, Brenda's got it. There's no support at all. We're trending down, which is, as Wen says in the chat, the wrong direction. This is, it's a one-way path to sadness here. Whenever I'm going to sell a put option, we need some upward movement, but at the very, very least, we need some downside protection. I need to have a pretty good idea of, okay, if this stock falls, where's it going to fall to? Now, one of the candidates here was Snap. So Snap's currently trading at 15.30, down about 2% today. Now, take a look at the difference between these charts. Snap, I don't think we can say is in a really, really strong uptrend. But what's the major difference between Snap and something like Teladoc? What does Snap have that Teladoc absolutely does not? There we go. Brenda's got it. Helen's got it. Tell you what, the ladies in the chat absolutely dominating today. We've got strong support levels. These blue lines on the chart, support levels. So I know Snap, if it goes down, I've got a bit of downside protection. Because that's what I want, right? If I'm going to sell a put option, I'm going to sell out the money put. Out the money meaning the strike price for the option is going to be below the current price of the stock. So what I'm doing as a put seller is I'm saying, where is that support going to be? How much downside protection do I have? And you see these blue lines here. We've got support at about 15. We've also got a bit more support at about 14.75. And the good thing is, and here's the thing to know about support and resistance, it's not just that there's a line there, it's how many times has that been tested? And in the case of Snap, we've tested this 14.75 once here, twice here, and then we've tested 15 here. So we've got a good bit of downside protection. So if I'm going to look at a potential strike price for this, I'm probably going to be either looking at the 15 strike or the 14.5. So Snap, we're going to go put that on the real short list. Let's look at another one. Give me a 1 in the chat if this all makes sense, by the way. Fantastic. Fantastic. You've got a great crowd this evening. England being terrible at football doesn't stop people from turning out to these calls. I love it. So let's look at another one. Let's look at Marvell. Let's look at Marvell. MRVL. Oh, this is a nice one. This is a nice one. Okay, so a couple of things to note here. What's the difference between this one and Snap? What are we noticing here? Yeah, we've got a nice uptrend on this one. Nice slow riser. Coming out of the bottom that we had post earnings. So number one thing to note, number one rule of selling options is you do not sell going into earnings. Because stuff like this can happen. Post earnings, we got a nice upward trend. We're actually almost back to where we were before earnings. So we went all the way down to about 60, 66, and then we've got a steady path up towards 73. You see here the RSI steadily increasing. Pulled back a little bit. See, we got a bit of resistance at 75, but then we've bounced off 70-ish, and then today we're hovering around 73, 77. So we got a little bit of support at 70.50. The old resistance, when we blast through resistance, that resistance becomes the new support level. So the new support is going to be around $70. And we have an additional layer of support at around 67. So probably going to earmark those two, 67 and 70. My spidey senses tell me that 67 is not going to give us the kind of premiums that we want, but I'm going to earmark those two. So Marvell looking nice. The other thing we like to see, as Carlotta says in the chat, these lines here, these are the moving average lines. So we have 20, 50, 100, and 200 day moving average lines. So the more important ones are going to be the ones that are more recent. We've got a big recency bias when it comes to selling options. And the 20-day line is 72 and 97. If you're wondering where I'm getting these numbers from, you can see the actual numbers here on TradingView on the left-hand side. So I've got the EMA exponential moving average, 20, 50, 100, and 200 days. If we're trading above all of those, it's a clear uptrend for the stock. And as a put seller, that's what we like. So probably going to be looking at the 70, maybe the 71 strike, and then also probably the 67 strike as a bit of downside protection. So two nice candidates there, both Snap and Marvell. Let's look. Oh, okay. I think we would be remiss if we didn't look at Southwest Airlines, right? Let's take a look-see at that one. Interesting. Rohan, the strike estimates were based on the support levels on the chart. Great question. Rohan's asking, how did I estimate the strike? So these are just guidelines. When we go into the actual option chain, when I load up Tasty Trade, then we'll be looking at the actual strikes we can do based on some other factors. So Southwest Airlines, this one looks a little bit like Snap. So what do we see here? Yeah, a lot of sideways movements. It's definitely a bit more volatile. I mean, this one has been all over the place in the past few months. Sonny, good to see you, my friend. Helen's hit the nail on the head. We've got, it's above 2 moving averages, but it's below 2 moving averages. So, and the interesting thing is the choppiness. A man says it's trending according to the choppiness. The choppiness, this is the interesting thing, right? It's right in the middle. If we draw that line, it's right in the middle, right? It's neither trending nor ranging. It's, we just don't know. So we don't know. RSI, once again, this is going to tell us the relative strength buying versus selling. It's a little bit on the selling side, a little bit downward. But once again, we do have some support. 2750 is the support line. To me, this one I'm a bit unsure of. This is the kind of stock that I'm seeing and I'm going, I've got no idea where this is going to go. I've got no clue. As Rohan says, it's below the 20-day moving average. It's also just a little bit below the 50-day one now after today's movement. So those of you who are in our options program, when I'm unsure, when I'm not really seeing a clear pattern, what's my move at that point? Yeah, I'll put it on a watch list, but not going to be entering any trades on this today. Carly's nailed it. I'll check back in a day or two. Hey, who knows? Tomorrow we could open up really green and things are looking much better again. But right now, I'm pretty unsure of where we're going to go. And that in itself is a huge advantage to you as an option seller because you've got a bunch of trades open at any given time. That time decay is working in your favor. You can afford to be picky. You can afford to be a bit choosy when it comes to the kinds of stocks you sell puts on. Because in my experience, the number one thing people trip themselves up on is they try and find way too many stocks too soon. And it's much better if you exercise a bit of patience, a bit of discipline, and be more selective. You know, there are some days I'll check the charts and I think, you know what, there's nothing really going for me today. I'm okay. I'll sit out. I'll come back tomorrow. Carlotta says on the RSI, this one at the bottom, the relative strength index, the lower the number means there's more selling than buying. Yes, that's correct. The higher the RSI, the more buying pressure there is. The lower the RSI, the more selling pressure there is. So you see here, it's about 45-ish. So there's a little bit more selling than buying. But once again, this is really dicey because as you can tell, we can't really tell which way the stock is going here. It's the exact same place it was 5 days ago. So love, not for me. I'm not in love with this one right now. Excuse the terrible puns. Let's look at Hewlett Packard. I think my first ever PC was a Hewlett Packard. Wowzers! This is one of the stocks we did as a group trade last week, and it went absolutely off to the races. One of those ones that makes me look like an absolute genius. So we've had a little bit of a pullback since Tuesday. Remember, the market was closed yesterday. I'm filming this the day after Juneteenth. So there's been quite a bit of movement today because, you know, we've got 2 days worth of buying or selling pressure built up. But overall, what's the trend here? Yeah, up and to the right, just how we like it. Since earnings, this one has absolutely shot up. So we're below the 20-day moving average, but we're still above all the others. RSI's fallen to about 50, so we've got neither buying nor selling pressure. But this choppiness is up here, which seems to indicate we're entering a period of consolidation. And so, to me, I'm okay with this, because let's think about it. If we consolidate, we move sideways around this area here, this 2150, what have I got below that as a potential entry point to the stock? Rob says 20. Wen says 20.5. 20.5 is where the support is. I quite like the 20.5 level because this gives me about, what is this? 6 or 7% worth of downside protection. So even if we get a little bit more downward movement, that's okay. I like this support level here because remember, once you go through resistance, that becomes the new support level. See, this is key here. This is key. So 2050, I'm probably eyeballing that one as a potential strike. Let me actually, there's one that isn't on this list that a few people have asked me to look at, and this is this bad boy. Hims and hers. Sonny, excellent question. Does the length of the support line mean anything? Yes, it does. The longer the support line, that just means the support's been in place for a longer period of time. The stock hasn't tested it as much. Whereas if it just bounces off and then goes straight below, then obviously the support line is going to be really, really small. You see here, HIMS has really just run up. So this support at 15 has been established for a while. We now have another layer of support because it bounced off 20.5. So this one's also now established for a little bit. So HIMS and hers, we've had a bit of a fall today. So we've gone down from 25 to 22.50. Wow, that's a big fall. Big fall. Just going to click on this, see if there's any news as to why. Oh my goodness. Sorry, the dog has literally just appeared at my window. Don't know if anyone can see this. This is not planned, I promised. Oh my goodness. I cannot believe that happened. I cannot believe that. Rohan, yes, that is my dog. His name's Jasper. He's an absolute legend. But the only trades that Jasper makes is every single morning at 6 a.m. he goes very long breakfast. And then about 5 p.m. he goes very long dinner as well. And for some reason he always wins that trade. So back to hims and hers. So few things here. When says $3 fall is huge. A $3 fall on a $25 stock is pretty big. In a single day, that to me sends my spidey senses tingling. So Rob says, makes me wonder if it's going to test the 21-inch price. It's fallen below the 20 and 50 moving averages. So this is the next one to be tested. Because falling down, falling down, falling down. RSI is in the toilet. Choppiness is going down. By the way, one thing about choppiness, it doesn't indicate direction. It indicates strength. So we can have a really strong trend. It can be up or down. The cool thing is, because we can read charts at a very basic level, which is all you need, by the way, to trade options, we're falling down. So therefore, the trend is down. Rob, it's a really useful indicator and probably the one that people don't talk about enough. I found it to be a lot more useful than other sort of like strength indicators. And I think choppiness combined with RSI is actually a really powerful 1-2 punch. Big common question I get asked is like, hey, you've got 4 indicators on the screen right now. Do you use more? The answer is no. When it comes to technical analysis, I like to keep things very, very simple. You know, I saw a post today on Facebook from a friend of mine who's really heavy into crypto trading. And he's talking about like falling wedge patterns with this Fibonacci retracement. We've got a 68% chance of this or that. And I'm thinking, to me, this chart looks like it could go either way. Like, why would I want to trade a setup like this? I don't want to play the game on hard mode. I like to play the game on easy mode. So something like HIMS is staring me at the face, and I'm just thinking, this is, I'm not feeling great about this. Once again, the cool thing about selling options is we can be discerning. We can be selective. So for me, here's what I would do in this situation. I'd wait and see what happens if we get to this level. Do we bounce back up and then sort of reverse and then go back up again? If so, could be a good time to sell puts. If not, I mean, this has been a huge runner. We've run up, what is this? This is like 70% in less than a month. If a stock runs up 70% in a month, can anyone guess what tends to happen on the downside? Yeah, Robert's right. There are pullbacks, and how strong are the pullbacks? Pullbacks are pretty strong. So for me, I'm not going to touch this. Not going to touch this at all. Doesn't mean there's anything wrong with the company. What it does mean, though, is going to be patient. Check back in a few days, see what's going on. As Miles, our esteemed head coach in the chat says, a lot of times it's going to fall back to a strong support level. So, hey, could fall back down to 21, start consolidating around there, but I want to wait and see. I'm not in the game of trying to guess what's going to happen. Just going to wait and see and then make my decision based on new data. what else have we got here? Let's look at, Sonny says, should we always enter the trade at the support level? Great question. Doesn't always have to be at the support level, but I like to enter near the support level. I very rarely enter a trade where there isn't a support level around my strike price. Pinterest, let's look at this bad boy. Yet another big run off the back of earnings. So what's happening here? Talk me through Pinterest. We've got 29 people with us. Talk me through. Chet's here. Chet, great to see you. It's been far too long. Jim's here as well. Good to see you, my friend. We've got a sideways trend. Nice period of consolidation. Once again, above 2 and below 2 moving averages. Very strong support at 41. Little bit of support at 42 as well. Robert says slow upward, strong support. And really that's what we want to see. If you had to summarize the kinds of stocks that I like slow upwards with strong support. I don't like stocks that are vertical. You know, we've talked a little bit about trading some of these crypto names, Marathon, Riot, CLSK, and they are vertical. It's all over the place. We don't do patterns. At least I don't. Doesn't mean they don't work. It's just not for me. The general thought is regarding patterns is sometimes the stocks themselves, based on the price movements, will form, patterns, certain shapes, and those shapes will be a leading indicator to certain price movements, up, down, left, right, strong, weak. For me, I never place too much emphasis on it. But strong support at 41, that's what I like. RSI right in the middle. And then choppiness basically right in the middle as well. But because we got that strong support at 41, this could be a candidate for me too. Rohan says, can you look at SOXL? Absolutely, I can. SOXL is a leveraged ETF, so we are going to expect the price movements to be stronger. With leveraged ETFs, I only like to enter the trade if the pattern is very clearly in my favor. Right now, doesn't look to be that way. You see here, we've got this pullback, and once again, this is leveraged. Any movement in the underlying is magnified 3 times. So generally, I want to stay away from stuff like this. This pullback here, not ideal. RSI is looking a bit weak. Choppiness is down, which means there's a strong trend. And to me, this trend looks like it's going this way. Because the thing to bear in mind about this particular ticker, SOXL, is this is being carried by NVIDIA. NVIDIA has been so strong this year that it's really lifted everything else up. And once again, when you have leverage on that, that's really going to magnify. So any weakness in NVIDIA, this thing's going to come crashing down. Because then we also have to consider like the correlation effects of, well, if NVIDIA shows some weakness, the other semi names get pulled down and vice versa. Bit more of an advanced topic. I'm actually going to do a special call on this at some point, just on correlations between stocks and sectors. But that's something to bear in mind, especially if you're trading these leverage names. SOXL. We'll look at the non-leveraged version of this, which is SMH. You can see here, very similar pattern, but because it's not leveraged, it's far less pronounced. So SMH, for example, great name for larger accounts. SOXL, smaller accounts, if you've got a bit more risk tolerance, it's been a solid name for the past 12 months, but you've got to understand what you're getting into with names like that. Let's do one more. We'll do one more for the crowd, and then we'll enter some trades. First one wins. Fastest fingers. Was that Who Wants to Be a Millionaire? Fastest fingers? A man I knew you'd win. It's that Corsair keyboard that you've got. Marathon Digital. Well, well, well. Talk to me. A man, the floor's yours. Everyone else is welcome to chime in as well. The crypto market has been absolute chaos in the past couple of weeks. Up, down, up, down. Got a bit of resistance at 21. We've also got quite a bit of support at 19. We got a little bit more at 1750. Tiny little bit at 1850. But we're looking at moving upwards, which is nice. We're above all four moving averages. I would like a 15 strike, says a man. Hold that thought, because we'll dive into TradingView in a little bit. Not TradingView, sorry, Tasty Trade, and we'll look at some of the levels that we can get. I want to know, where would you place your strikes if you were going to enter a trade on this? Carlotta says 1850. Helen says 18. Rob says 19, 18 sort of level. Rohan says less than 0.1 delta. A man wants to see the delta. Let's look at the delta, shall we? So first of all, we don't have the half strikes on this particular expiry. Let's go down to see if we do. We do 22 days out. Why that is, I couldn't tell you. Sometimes they just are there. It's not like the 29. I mean, the 29 is a monthly, so we should have the half strikes anyway. It never made much sense to me, but hey, we got the half strikes. So the implied volatility is very, very high. That's the first thing to note. This is not a typical trade for us. Not a typical trade. But to mitigate the high implied volatility, what are we going to do? What are we going to do to mitigate? Yes, we're going to use a lower delta number. So our usual trade would be around the 0.3 delta level. So usually we'd use something like this, the 19 strike. To me, just based on the chart alone, that's too high. And you look at this, this is almost a 4.5% premium for a 22-day trade. That's huge. So I want to be a bit more conservative here. So I'm getting 2% at 14 delta. 32 cents for a 17 strike. I'm getting 1.5% almost at 16.5 delta. Sorry, 16.5 strike, the 11 delta. That's really generous for a 22-day trade. Let me just go back to the chart. We got support at 17.5. Haven't been below 17 since early May. Carlos says very low volume at 17. Well, there's 46 contracts traded today with 318 open interest, which isn't nothing. Oh, you saw 16, that's why. Yeah, Helen, great point, actually. If you change the number of strikes, you will see more strikes. So by default, I think it only actually shows 10. But especially a stock like this, we want to see a lot of strikes. So I just always change it to all. 20, for most stocks though, 20 is going to give you all the ones you need. Just these ones, because we want to go lower on delta, I just select all. So for me, I think we can even push to 17.5, to be honest. I'm going to get 2.5% for a 22-day trade, 40 cents. Let's do it. So we've got that trade in. What were the others we were looking at? We were looking at Snap. I've already got a trade on Snap, 22 days to expiry. It's at 14.5. What did I say earlier? Did I say 14.5, right? I did. 27 delta. So usually, if we're going by delta, our starting point is going to be 0.3. So we look at this implied volatility, 45%. This is much more like the kind of stock we would usually trade. So you see here, let's look at what sort of premiums we're getting. We're getting 25 cents for a 14.5 strike, which is, what is that, 1.6%? And Rob, you may be thinking, why not go to 29 days to expiry? The reason for that is, if I've got earnings on July 23rd, and I place a trade here, I don't have much more flexibility with adjusting that trade. I can't really roll an extra week to collect premium and buy myself time, because then I'm rolling through earnings. So I don't want to do that. So to me, entering the trade 22 days out gives me that week of flexibility in case I do need to roll it. And that's why as a group, we actually entered the trade on this particular expiry date. Give me a 3 in the chat, everyone, if that makes sense, choosing this earlier expiry date in order to give us more flexibility. So let's go with this one. I'm going to end up with 2 contracts of Snap. So what was the other we looked at? We looked at Marvell. And then Pins was the other one, wasn't it? It was Pinterest. So let's look 36 days on this one. I said 41 strike. 42 is the 30 delta. Not a lot of volume on this one, though. Not a lot of volume 36 days. See here, this volume column? We've had 3 contracts traded today. And not a lot in terms of open interest either. So people really aren't that interested in Pinterest. Guess you could say they're not that Pinterested. I'm here all night. Here we go. What do we notice in this one first and foremost? Volume-wise, talk to me. Lots more volume here. It's still a little bit low, as Rohan says, but if we look at the open interest, we've got thousands of contracts worth of open interest. One thing I will say though, premiums aren't great. Implied volatility is 40, which isn't super low, but 30 delta, 29 days out, just paying me 1.5%. 20 delta's paying me 1%. Let's take a look at this one versus Marvell. So Marvell, very similar implied volatility, 45% versus 40%, 29 days out. So 20 delta is paying me on this one 1.4-ish%. Rohan, great question. What's the difference between volume versus open interest? A lot of people get these two conflated. Volume is the trades entered on this particular day. So if you open up Tasty Trade or Interactive Brokers free market, volume is always going to be zero because there haven't been any trades placed yet. Open interest is the amount of people who have orders at that level waiting to be filled at a certain price. So open interest is always going to be there. That's why you'll see we've got 4,500 contracts worth of open interest, but only 548 actually filled so far. That's why you're going to see lots of open interest at random, really far out of the money strikes, because people probably put those on ages ago. Or it's funds like institutions who have protective puts down there. Because otherwise, there's no reason that anyone would logically be like, oh yeah, like let's do a 1 delta trade on Pinterest today. Let's get 2 cents in our account. Rohan, does that make sense? Cool. Well, when the market was closed yesterday, so there were no trades actually filled. There were orders placed yesterday, but those orders would not have been filled until the market opened at 9:30 this morning. So 30 delta, I'm getting just over 2% for a 29-day trade. 20 delta, I'm getting 1.4-ish. Sonny, we don't know. Great question, though. Sonny's asking, are these buyers or sellers at the open interest level? We don't know. But in terms of does this affect us that much? Not really. Because if we're selling, 99% of the time there's going to be a buyer, unless we're trading really far out of the money options, which is very rarely going to be the case. Or we're trading really far expiration dates, which we just don't do during this strategy. So let's look at Marvell again. And I want to see the chart. See if we can find a nice strike here. So we had 71 as kind of like a weak support, and then much stronger support at 67. So if I want to be conservative, which is where I'm usually at with my trade entries, I'm going to go where the support lies. So I'm going to go 67.50 on this one. Because remember, I'm still getting more than 1%. The rule is I want at least 1% on my trade. That being the price of the option is at least 1% the price of the stock, or the price of the strike in this case. So if this is a 67.5 strike, I want at least 67 cents. And that's in order for this to be worth it in terms of putting my capital into this trade. Because let's think about this logically. If I'm doing a 29-day trade, I can do about 12 of these a year. So if I do 12 trades a year and I get 1%, it's 12% a year. That's like the absolute minimum I would be okay with to do this strategy. Our actual returns are much higher, but absolute minimum, 12% I'd be okay with. Because you've got to think about the opportunity cost of doing this versus like just buying and holding an index. So give me a 4 in the chat if that explanation makes sense. Brenda, you're jumping the gun. But I am buying it back at 50%, and that's why we get better returns than this. Because I very, very rarely hold trades to expiry. So let's enter this one. Rohan says, however, index might be better than 12%. I'm going with the average, though. Average over the past 100 years for the SPY is just over 9.7. So to me, I'm not going to do a strategy that's netting me less than 12% a year, because the incremental time it takes me to do this versus just buying and holding an index. So let's see the positions we've got. So we entered Marathon Digital, we entered Marvell, we entered Snap. I've got two Snap trades now. So the only thing left for me to do is put in some buyback orders. So I'm just going to do my closed profits, 50%. Those will sit there waiting to be hit. And then closed profit 50% for Marvell as well. Sit there waiting to be hit. And then now all I'm going to do is sit and twiddle my thumbs. Should do that Snap one as well. Just the one today, please, because I already have a buyback order for another trade. Rohan says that's the worst part. My friend, I disagree. I think that's the best part. We've had students seeing their buyback orders in Nepal at Everest Base Camp. We've had students hitting them in Antarctica. Shout out to Christian. So I can now tell everyone we've sold options on every continent as a group. I've had them on vacation. I've had them at the hospital. I've had them while chilling in the garden. I've even had them while Jasper's jumping at my window harassing me. Carlotta, excellent question. You say, entering a buy to close on the same day you sell is not considered day trading. No, it's not, because that buy to close order has not filled yet. All I'm doing is placing that order to be filled at a later date. So if you see inside my Tasty trade, we had those 3 orders filled, and then these 3 are working. Working just means they're there, but they haven't been filled yet. It's only considered day trading if those orders get filled on the same day. So if I decided to close out the trade at the current price, if I just did a market order, that would be considered a day trade. Whereas just placing the order itself not considered day trading unless it's filled on the same day. And that's only an issue if you're trading less than a $25,000 account. So, quick update for everyone. At the end of that video, obviously I placed all of the trades, and it's one thing to actually enter the trades, it's another to see how they perform. So it's currently July 1st, so we are 10 days after the initial call that we did, and we placed 3 trades on that call, and I'm very pleased to report that 2 of those have already completed. 2 of them have already hit their profit levels. So the first of which, and I'm going to see if I can get the annotation out, there we go. So the first one was the Snapchat trade that we did on 20th of June, that was the Thursday. And as you can see here, that actually filled the profit order 5 days later. So even though that was a 22-day trade, we hit our profit level in just 5 days, which obviously is better for us because on an annual basis, that gives us far superior returns. And then a couple of days after that, 8 days after the initial trade, our Marathon Digital trade hit our profit level. So you can see here, entered on the 20th, and on the 28th, it hit the profit level. We bought the trade back and we locked in our profits. Now, as I'm recording, the Marvell one is still active. No problems there. We've still got another 18 days to go, so I'm happy to let that play out. Everything's, working pretty well. Still out of the money, so I am going to just keep patient on that one. But I'm just going to go to our calculator. So this is what we give to students to help track their results. And as you can see here, the 2 trades, one of them, the Snapchat trade, annualized return of 60%. The other, the Marathon Digital, annualized return of 43%. Because obviously, even though that trade paid us a little bit more, we were in the trade for a little bit longer. So that's why in terms of the annualized return, it is slightly less. So just a quick update for you there. So as you can see, 2 of the 3 trades we placed are already profitable. And I'll check in with another update when hopefully that Marvell trade locks in its profits as well. And you can really see how powerful this system is. So it's now Wednesday, July 3rd. So we are 13 days into this trading cycle and we are now complete. The 3rd trade that had not yet filled has now filled. So just look here on the Marvell, filled at 49 cents. So that's half of what we originally sold it for. So that's 50% profits, and that filled today. And funnily enough, it actually filled while I was on a live training call with our students of Options Cashflow Accelerator, which is always funny when that happens. So that trade lasted 13 days in total, and let's see the results. First of all, I want to point something out. When we sold this option originally, the stock was at 73.24, and today it's at 73.09 or 73.10 as of right now. So the stock's actually gone down in price, and it went down quite a bit actually before recovering slightly. But here's the thing, when you sell an option, especially the way we do it, the stock doesn't have to skyrocket for you to make money. It can do nothing. It can even go down like we just saw. So if we look at the P&L tracking sheet, you can see here this trade was less profitable than the other 2, but still that's an 18% annualized return on your money for this particular trade. So, you know, the S&P gets you 9.5. Even in a non-ideal trade, we still made 18%. Even in a trade where the stock itself went down, we still made 18% returns on our money. So those 3 trades we placed on the live call, Snapchat, 60% returns, Marathon Digital, 43% returns, and then Marvell, 18% returns. Not too bad. We placed 3 trades, and within 13 days, remember we placed 2 22-day trades and 1 29-day trade. And within 13 days, all of them were profitable. 1 in 5 days, 1 in 8 days, 1 in 13 days. That is how powerful this strategy is. And now you've seen the full cycle. So not just the entry, you've seen how those trades played out as well. I hope that you can see the power of this strategy. Check out the book. And if you do want to work with us so we can duplicate these kinds of results in your portfolio, there will be a link to book a call below this video. You can have a chat with me or one of my team to see if working with us is right for you. So take care. I hope you enjoyed that video. And if you are serious about leveling up your income using the wheel strategy and you want my help, there's a link to book a call with me or one of my team below in the description. We'll dive into your goals, what you're working with right now, and see if working with us is right for you. And either way, I'll see you in the next video.